Banks across China have been facing ongoing issues, leading to more conflicts and disputes. What's even more concerning is that some bank employees are no longer focused on handling regular transactions, but are instead figuring out ways to take advantage of customers. Some have even resorted to deceptive tactics. Whenever you go to the bank for any kind of transaction, if the staff there asks you to scan a QR code, don't scan it. This morning, when I went to the bank to get a commemorative banknote, a staff member in uniform handed me a QR code and asked me to scan it. At first, I asked, "Why do I need to scan this?" He replied, "This is my work WeChat." I started thinking, since I didn't have any business with him, could I just refuse? But then he kept talking, trying to persuade me to scan it. I was almost convinced and was about to scan the QR code when he suddenly switched to a different piece of paper. That paper also had a QR code on it. When I looked carefully, it said something about a personal pension account. I immediately said, "Don't bother. My account has already been opened with another bank." As soon as he heard that, he walked away. I just want to remind everyone, no matter what business you're handling, if someone gives you a QR code, either refuse to scan it or check it carefully. Even if they ask for your help and you feel bad turning them down, make sure you know exactly what it is, what it's for, and whether it could have any negative consequences. Online users reacted to her experience, saying, "Even QR codes can change faces these days. What else can the CCP do besides scamming people?" Just wait, soon people's bank deposits will mysteriously be transferred to pension accounts to fill the funding gap. In this country, you have to protect yourself against thieves, scammers, and banks. In recent years, as China's economy continues to struggle, the real estate sector has been hit hard by developers defaulting on debt, pushing the industry to the brink of collapse. Many small banks have suffered severe losses due to bad loans tied to real estate, while poorly managed rural banks and cooperatives are in chaos. Cases of executives fleeing with huge sums of money, leaving thousands of depositors with nothing, happen all too often. A viral video exposed an incident that happened on February 12th in Langfang, Hebei. A man went to a local credit cooperative to protest, claiming the institution's director had used his company's name to take out an 8 million yuan loan. But once the loan was approved, the director kept the money, leaving the man burdened with a massive debt without any compensation. Desperate and at his breaking point, the man threatened to drink pesticide inside the bank if the director didn't come forward to resolve the issue. But the director never showed up. With no other options, the man actually drank the pesticide and collapsed inside the bank lobby. Only then did staff finally call the police. Authorities fear these kinds of extreme incidents as they expose the deeper problems within China's financial system. To prevent a wave of small bank failures, Beijing quietly started merging smaller banks in 2024, focusing on rural banks. This has become the largest consolidation of rural banks in China's history, and the trend has continued into 2025. So far, nearly 300 small banks have been merged. On February 10th, 3 more rural banks in Changshu, Jiangsu province, were absorbed by a larger bank. According to an announcement from Changshu Bank, it approved the acquisition of 3 local rural banks. Observers have noted that this is not the first time Changshu Bank has taken over struggling rural banks. In November 2024, it had already absorbed Jiangsu Datu Mengying Rural Bank and set up a branch. In just 3 months, this county-level bank has merged with 4 financially troubled rural banks. According to a report from 21st Century Business Herald on February 10th, China experienced a boom in rural bank establishments around 2010, with their numbers once exceeding 1,800, accounting for more than a third of all the banks in the country. However, in recent years, frequent financial crises have forced authorities to take action to manage the risks exposed by failing rural banks. A Reuters analysis of regulatory and corporate filings over the past 12 months found that in 2024 alone, at least 290 rural banks and cooperatives in China were merged into larger regional lending institutions. This large-scale consolidation highlights the severity of China's financial sector problems. As of June last year, China had around 3,700 rural cooperatives or small banks, with total assets of 57 trillion yuan. Over the past decade, many of these banks aggressively lent money to real estate developers and local government financing vehicles. But as the economy weakened and the property market declined, these banks were hit hard by a surge in bad loans. In the third quarter of 2024, the bad loan ratio at China's rural commercial banks reached 3%, nearly double the industry average. Experts say the financial situation of many small banks is even worse than the numbers suggest. Making matters worse, many of the nearly 4,000 small banks were established with backing from heavily indebted provincial governments. They rely on short-term funding from the interbank market and money markets to stay afloat. If some of these banks collapse, it could threaten the stability of China's financial system. Jason Bedford, a former Bridgewater and UBS Asia analyst known for his deep research into China's banking sector, pointed out that these small bank mergers are often just consolidating failing institutions into what he calls bigger problem banks. Christopher Bedore, deputy director at Gavical Dragonomics, echoed this view. He noted that while merging small banks reduces the number of institutions regulators need to oversee, it doesn't solve the underlying bad debt issues. Many of these banks' financial troubles remain unresolved. A telling example is the Liaoning Rural Commercial Bank, which the Liaoning provincial government established in September 2023 with just 20.8 billion yuan in registered capital. By June 2024, it had already absorbed 32 rural banks. Financial experts warn that behind this wave of mergers, there could be hidden financial risks yet to explode. Recently, some unusual banking signals in China have raised concerns. A Yicai global analysis found that in the past month, 5 banks, including Huairen Rural Commercial Bank in Shanxi and Nanao Rural Commercial Bank in Guangdong, have set their one-year fixed deposit interest rate equal to or even higher than their 2-year rates. Huairen's latest notice to customers showed a one-year deposit rate of 1.75%, but a 2-year rate of just 1.45%. The 3-year rate was also higher than the 5-year rate. It didn't take long for social media users to notice. Some finance influencers advised people to move their savings into the stock market or other investment options, but others warned that this unusual rate structure could signal deeper issues. A finance blogger known as Mr. Zhang shared an alarming perspective. Even bank managers admit privately that if the economy stays sluggish next year, they won't even be able to offer 1.75%. It used to be that you got better rates for long-term deposits, but now the shorter the term, the better the deal. This isn't an inverted yield curve. It's banks playing a survival game. Who knows, by the time your 2-year deposit matures, the bank manager may have quit and started delivering food. Some online users questioned where people in China should keep their money. They pointed out that depositing it in a bank might be risky, investing in financial products could lead to losses, and even storing cash at home risks devaluation. One user warned, "Are you going to keep your money in the bank or withdraw it overnight? The financial troubles you're watching today could hit you personally tomorrow." Analyst Wang Guocheng of Taiwan's Changhua Institution for Economic Research explained that interest rate inversion is typically seen in government bond trading, not in fixed deposit rates. He suggested that the unusual situation might be linked to some Chinese banks urgently needing short-term cash flow. He said, "This kind of deposit rate inversion is a China-specific issue. Why are they doing this? The banks don't want to attract long-term deposits because it increases their interest payment costs. At the same time, they need liquidity. If they run out of cash, they could face a bank run, so they prefer taking in short-term deposits rather than locking in large amounts of long-term savings." Wang pointed out that since last year, Beijing introduced measures to help local governments handle hidden debt, which eased some pressure on regional banks. However, the banks now offering these inverted deposit rates are in places like Shanxi and Guangdong, regions that have experienced real estate collapses and bank runs. He believes these banks' actions are closely tied to the ongoing property debt crisis. He added, "The inversion rate looks bad, but it's clearly a decision from the central government. Banks are scrambling to save themselves, but at the same time, Beijing keeps piling on new responsibilities, bailing out real estate, dealing with pandemic relief loans from 2020 that still haven't been repaid, and handling debt restructuring. Local banks are being forced to take on all these burdens, yet they're already short on money. If liquidity dries up, bank runs happen. They're caught between meeting performance targets and obeying orders from above." Professor Xie Tian from the University of South Carolina School of Business sees the rate inversion as a sign of cash shortages at local banks, exposing deeper economic problems in China. He explained, China's economy is in decline. When businesses struggle and shut down, banks see more bad loans and liquidity issues. If this inverted rate strategy spreads widely, more banks will face rising bad debt and defaults. That could lead to a full-blown banking crisis, which would be a serious problem. Some netizens noted demonstrated that the public is paying close attention to these bank rate shifts because, in tough economic times, people become especially sensitive to financial system changes. Their growing distrust of banks reflects a larger loss of confidence in China's financial stability. With China's economy weakening and banks facing increasing operational pressure, customer service has also deteriorated, leading to more conflicts between banks and the public. On February 1st, a cycling vlogger tried to replace his bank card at a postal savings bank branch in Xinjiang. However, a staff member told him he needed to provide a temporary residence permit and proof of employment.
Are you saying that every single person in China has a job?
Of course, everyone has a job.
Who told you that? I don't have a job. So does that mean I can't replace my bank card?
Sensing that the situation was escalating, the teller eventually agreed to process his request. But when a lobby staff member noticed he was live streaming on his phone, she immediately tried to stop him, saying that recording wasn't allowed. The vlogger asked, "Who made that rule? There's no national law prohibiting filming in public." He explained that he was only recording himself to document the process as proof. This led to another argument, and in the end, the lobby staff even called the police. Online commenters shared their thoughts. They put all their effort into making life difficult for ordinary people. Xinjiang is probably even stricter than other places. Outsiders are treated differently when they go there, and Xinjiang locals face the same when they travel elsewhere. I went with my father to open a bank account at the agricultural bank today. The staff asked if we owned a home in the county. I said no, and they told us we couldn't open an account without one. Lobby staff have zero crisis handling skills. The teller had to step in and explain the banking rules, but when it came to calling the police, the lobby staff reacted the fastest. Some netizens pointed out that this issue isn't limited to banks. Almost every institution seems to have people in minor positions of power who go out of their way to make things difficult for others. One commenter from northeastern China shared a personal experience that was both frustrating and amusing.
Why do so many college students from northeast China end up packing their bags and leaving to work elsewhere? Because if you don't have connections back home, it's almost impossible to get anything done. When I was a senior doing my internship, my professor wrote me a recommendation letter and told me to go to a TV station's production team to find a producer who could arrange an internship for me. I took the letter to the TV station's entrance, but since I didn't have an access card, I had to go sign in as a visitor. The visitor's pass was just a thin slip of paper valid for the day. When I got to the team, I noticed that all the other interns had access cards, so I asked the producer where I could get one. He pointed me to a place, but when I got there, they told me to go somewhere else. I kept getting bounced around like that, like a ball all morning, until I finally ended up in a mailroom. Inside, there was just a broken desk and an old man sitting there. He glanced at me and scolded like I owed him money. He said, "Visitor passes like yours can only be issued for a week at most." I asked, "Uncle, can you make it a month? So I don't have to bother you every time?" That one sentence set him off. He mocked me, saying, "Why not make it valid until next year, or until your retirement, huh?" So in the end, every day, I had to show a piece of paper to the security guard at the entrance. I couldn't use the elevator because I had no access card, so often I had to take the stairs. The access card issue was bad enough, but what disgusted me the most was the meal card. The janitors and security guards ate in the basement cafeteria, where the food was basic. Meanwhile, the editors, reporters, and executives ate on the second floor, where the meals were much better. When I went to the admin office to get my meal card, they gave me one for the basement cafeteria. I asked if I could get one for the second floor, even offering to pay extra. The admin lady just said, "It's not about the money. Interns can only eat downstairs." I asked, "Then why can the other interns in my team eat on the second floor?" She shot back, "Why don't you ask them who arranged their meal cards for them?" On top of that, neither the interns nor the colleagues wanted to talk to me. When they were chatting, I tried to join in, but they just glanced at me and continued their conversation like I didn't exist. It was so frustrating that I quit after a week. Then, my mom, in full-on protective mode, started digging around for connections. After a ton of effort, she finally found a relative of a colleague who was a senior official in the TV station's management. That person made a single phone call. When I stepped into the production team again, it felt like I had entered a parallel universe. The producer greeted me with excitement. "Oh, Xiao Wang, why didn't you come yesterday? Here, take your access card and meal card. Why were you even handling this yourself? You should have just told me. Who do you want as your mentor? A good-looking senior sister or a senior brother?
The young man from northeastern China summed it up bluntly. Where he's from, a single phone call or a casual word from the right person can accomplish more than running around endlessly on your own. He described how people with even the slightest bit of power often take pleasure in making things difficult for others, as if they need to assert control. Decades of authoritarian rule under the Chinese Communist Party have eroded traditional values and morality, turning society into one where people at the bottom struggle against each other instead of supporting one another. In recent years, the worsening economy, corporate failures, and financial crises have only deepened social divisions and public frustration with the government. The banking crisis is looming, and if the financial system truly unravels, it's hard to imagine how long the current regime could hold on.